All right. Good morning, everybody. Good morning. You should be able to hear me now, Jay. Happy Wednesday. Happy hump day. I hope everybody has a little bit of you got over your market hangover last night. Yes, we had a nice little drop, but if you know right into this green little box. All right. So let's make sure. You should be able to hear me now, Tina. Are we good? We good to go? All right. Awesome. There we go. No problem. All right, so again, little market hangover, right? I felt it this morning, didn't you? So I woke up, I looked at the ES. I did go long the MES. I told you that yesterday on this pullback, and people were fearful, and it came right into this green little box, and then it went bid. Surprising, right? Not really. So we talk about this quite a bit. And let's just kind of go over this, okay? News was a catalyst that pushed price into one of our levels. All right, and it's never good news, right? It's got to be something bad. And let's go ahead and just draw on the screen here. Give me 1 second. All right, so you can see that I have a channel that's going here. It's somewhat transparent. Pulled down into these levels that we had. Pushed up over the line in the sand last night. That was here at 3351. Hit our first target and then hit our second target. Let's go ahead and zoom in. This is a trendy edge. When price is underneath an edge, we look at it, look for it to be resistance until it's not. Okay? All right, so price pushing up here. Now notice we're looking at a daily chart. So what does that mean? That means that this candle can do whatever it wants. It can move up, which it already has, right into our target. It could come all the way up here, but by the end of the day, could end up closing under here. And I could say, see, I told you. It was resistance until not, right? You guys following? So it's very easy to manipulate things by using different time frames. So we got to be on the right time frame. So what we're going to do here, we're going to bring this down into a 4-hour. All right, and so far as right now, I like what the 4-hour is showing me. Notice that the 9 EMA is just underneath the trendy edge. Notice that price is above the 9, and so far it's holding. It also gives me a little bit of leniency. If for some reason we open up, we start to scare those traders, right? And we come into the 9, and we just kind of watch it, and if it reclaims and can hold and make higher highs, then boom, we're right back up here into our targets into 3399, 3409, and I would be cautious at or around the levels I gave you on our morning note. So let's go ahead and go over that just really quick. I'm going to bring this down. All right. And so after yesterday's new catalyst, price moved its way into the green box, like I said. This is a great example of news as a catalyst to move price faster to an edge or a level. Many traders will be reluctant to execute today because they will find ways to justify staying out of the market due to politics, chop, right? Oh, this is just messed up. This is how things happen. But really, if you think about it, we had the green box before the market, before this pullback, and we had this red box before the market. We showed that and showcased that yesterday. All right. So supply and demand and or trendy edges are really difficult for people to understand that we really can use levels to predict movement in the market. Pretty neat. All right. So what is our plan today? My plan today is to set and forget. So I want to give the market about 15, 30 minutes or so on open. And once I see what direction we are headed or feel like we're headed, I'm going to go ahead and put some trades on. And if you're worried about volatility, here's something that I like to say and use. Smaller size, wider stops. Listen, smaller size, wider stops. Why do I do something like that? Because I want to soak in that volatility. I don't want to be pushed out of trades. I don't want to get scared out of trades. What I want to concentrate on is the bigger picture. All right, so let's do that really quick. We have a down range. We're moving up. Okay, higher highs, higher lows, believe it or not, even after that drop yesterday. See, this is the thing. When you are dropping and you have a trendy blueprint, you think, okay, there's a green box, but did we take out the previous low? We did not. The trend in a down range is we were trending up in a down range. All right, so ES, again, what we'll be looking for on open, I'm using a 4-hour. Can the 90 EMA hold? Can the trendy edge hold? Basically, the trendy edge between the 90 EMA are neutral. Just stay flat, just watch, and we'll be good to go. All right. So far, MES last night here at the box, you could see very nice points here, 30 all the way into 80. That gives you about 50 points. Let's go ahead and move on. So one of the charts that I want to look at today, and I apologize for being just a tad late. All right. So we were a tad late because I'm trying to get a couple things sorted out here. But let's go over here into United Airlines. All right, so the blueprint for today on the widescreen, you can see here very well. We have what's called the AC/DC setup. And give me 1 second.